trading the Nasdaq 100. We're going to go over today's market recap. We're going to talk about exactly what happened today. We're going to talk about where price can potentially go. If you found yourself in a little bit of a pickle where, you know, you couldn't really get your feet under you, it's okay, right? It's okay. There's no rush, especially if you're trading on a prop firm and you're not trading real cash where you need to make money today because you got to pay your mortgage tomorrow, right? If you just look at where the market has come from, okay, we're looking at the daily chart here. Just count back the number of green days or days where we're moving higher and or resting. Okay, so yesterday, 1, 2, 3, 4, 5, 6, 7, 8 trading days in a row where we did not have a green close. Okay, so surprise, surprise, is it shocking that we had a little bit of a choppier day today, right? No. If you are surprised, you need to take a second and start doing more top-down analysis when it comes to the bigger time frames, 1 hour, weekly, 4-hour charts. Because although the market did take out previous day high, we did, you know, attempt to move higher, it's not surprising. Okay, it's not surprising that we had multiple hours during today's session where the market was just kind of drifting. Okay, so if we look at where we're coming from here on the daily chart, this is our second going on third day above the 50-day moving average. Now, this move to the top side is by no means finished. Okay, now, does that mean tomorrow that we're going to see another green day and we're just going to push higher? No, we can still continue to backtest anytime you take out and you reclaim a significant area of supply. Okay, in this case, it's the red line here. It's this 50-day moving average. It's a big deal. Okay, it's a big deal. It normally starts to set up a multiple day, multiple week rotation, okay, but you can see some choppiness days, you can see some pullbacks, you can see some red days in that next cycle. So if we look at the area here, the 50-day moving average at around 19,600, we broke out, we put in this high. I can see us pulling back into the range of 19,650, 19,700, okay? And that's still going to be healthy. So what we're looking at here in this next cycle is I'm looking for a push up into 20,000. Okay, before this is said and done, I'm looking for the push into 20,000. That's going to be our linear regression, our upper Bollinger Band. It's going to be this middle channel here. Now, if we were to kind of drop a fib from the previous high, okay, from this all-time high here of 20,983, if I was to drop this fib, and oh gosh, if I was to drop the fib, give me 1 second here. If I was to drop this fib from that high to this low that we put in on the 5th, you're going to see here that we're well above a 50% retracement. We're well above a 61.8% retracement. So this move off the floor is great, but you can start to see how we're going to get a little bit of chop. Okay, we're going to get a little bit of distribution. So what I'm looking at here, and let me take this off because I got enough going on my chart as it is. You can see that our 61.8% retracement here is right around this 50-day moving average. You can see our 50% retracement here is right around this 50 EMA as well as this linear regression. Okay, so you can see that. You can see that. What I'm looking for here in terms of the next move of how I'm going to play this, I'm going to let the market do its thing. If we just kind of look at the range, here, right, from today's session, we had about a 200-point range. Okay, 200-point range, which is not that much. So when you look at it, a 200-point range, when we were coming off of ranges of 350, ranges of 500, ranges of 500, ranges of 850, you can see how the volume is starting to contract a little bit. So what is that telling you as a trader, guys? It's telling you take your foot off the gas a little bit. It's time to coast. It's time to see what the next move's going to be. whether that move is a pullback into 19,600, hell, whether that's a pullback into 19,300, that's okay for the move, okay? The bulls are not in any trouble here until we start closing back below the 20-day moving average and back below this 20-period moving average. Okay, until the bulls lose 18,900, we're not even going to be concerned about the pullbacks. Look at the pullbacks, especially if you trade stocks, as areas of opportunity to kind of dollar cost average into your position and kind of swing these out, okay? Again, 8 days in a row green. You cannot be surprised. If you are surprised that the market is a little bit choppy, we've got problems. We've got big problems, okay? As far as when it comes to, analyzing price action and technical analysis, we have to be anticipating a pullback. We have to be anticipating a move down for a continuation move higher. Makes sense? But that does not mean that we need to be hesitant when we take out a previous day high to go long, okay? You can't be sitting there thinking on the fence of, well, I can't go long because, oh my gosh, we're up 8 days in a row. If I go long, it's going to pull back. You have to continue to ride the trend until the trend is showing you that it's over. And there's nothing right now in the price action that is showing us that this trend is over. Guys, we're 2-3 days above the 50-day moving average. This is nothing. Look at what happens once we closed below the 50-day moving average. Once we close below the 50-day moving average on the 24th of July, we spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, 12 days, 13 days, 14 days, 15 days, 16 days below the moving average. We spent almost a month below the moving average. Now, mind you, 4, 5, 6 of those days were up, but the point is from when the closure happened below the 50-day moving average here, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It was 2 weeks spent below the moving average. And that is not even a long time on a macro perspective, okay? So we're barely 2 days over this 50-day moving average again, okay? So until we lose the 50-day moving average and until we start losing the 20 period and get back below this 200, the bulls have nothing to be concerned about. But our minds need to be open to going with both sides of the trade, especially if you're a day trader. Many of you guys who are trading futures, many of you guys are scalpers, we've got to be prepared to go both long and short. We need to understand what we're doing on a bigger time frame, but we need to be ready to go on both sides of the trade. So what I'm looking for tomorrow is obviously anything over today's highs is the long, okay? So what we would be looking at, 19,931 has room to push into 20,000 and then 20,080, okay? That's going to take us to our next supply zone right here. If we get below today's lows, our support is 19,650, which is about 150 points down. Would that be shocking? Would a 150 point red day be shocking? No. Would it be the end of the world? No. Would there be an area of opportunity to take advantage and make some money on that? Absolutely. So be ready for both sides of the trade is what I'm trying to tell you. If you're finding this market a little bit difficult to trade right now, then make an adjustment that's gonna make it a little bit easier to trade. What does that mean? Maybe instead of taking 10 trades a day, you take 5. Maybe instead of trading 1 mini contract, you trade 5 micros. Maybe instead of looking for 40 point, 50 point take profits, maybe you look for 10 to 15. Okay? If you're scalping for 5, maybe you look for 4. But make some type of adjustment, show that you're a human being, show that you can be dynamic and you can adapt to what's going on in the market instead of just being a cinder block and sitting there, doing nothing, doing the same thing you do every day. Okay? Adjust, adapt. If you want to trade these markets and you really want to be good and you want to be successful and you want to be consistent, you've got to be able to be a shark. Okay? And when I mean be a shark, that's being able to swim in choppy waters, okay? That's being able to make the adjustments, okay? To find the food. We need to find food. What is food? Winning trades. What is food? Money. We need to find the money. Maybe the setups and the strategies that you were taking 2 or 3 weeks ago are not working. So what are you going to do to make the adjustment? Maybe trading in the first 30 minutes of the market is not working for you right now. Maybe you need to go to after, or maybe vice versa. Maybe sitting out of the market 1-2 hours and then kind of waiting for something later in the day is not working for you. So what are you going to do? Maybe we catch that one or that first or second move off the open. Okay. So are you journaling is my question, right? Are you journaling? And if you are journaling, you know, based on your journal, what you're not doing right. You already know this. So what are you going to actively do to get better? Hope you enjoyed the video. Like, comment, and subscribe. If you guys want to trade with me, that link is down in the description box below. I do have one more spot available. Also, if you guys are looking for new evaluation accounts with Apex, that 71% off sale link is down in the description box below. I believe you just need to, I believe the promo code is just included, or save 71 or something like that. It's something generic. You can go to the link down below and see for yourselves. Again, be dynamic. Okay, look at the chart from the top down. Okay, even if I was to go to a 4-hour time frame and I start to look at the bounce on the 4-hour time frame, what is this showing you? I'll just take everything off here except just a couple of things. Okay, what is this chart showing you? This has been a phenomenal bounce here, a phenomenal bounce. If you zoom out and kind of look at the bigger picture, we finally broke in the previous swing high on the 4-hour chart, but we are back at resistance. What's the resistance? Okay, what's the resistance? The resistance here, and I'm going to make this a different color. What color should I make this? The linear regression, I'm going to make it white. If we look at the linear regression, notice the downturn. Notice the first dead cat bounce was right into the linear regression before. Notice how we put in those generational lows, right? Everyone was talking about. Notice how we've been on a fantastic rally, and look at where we're stopping. We're stopping at the linear regression yet again. Okay, again. So until we break over the linear regression, we have to respect that we can get a little bit of a pullback. Now on a 4-hour time frame, 19,680 and then 19,564. Those are your two supports. So if you're looking to go long because maybe you're a better long-sided trader, then you want to be a buyer down in this area, down towards 700s, down towards 550s. That's where you want to be a buyer. That's where you can get a cheap long because you can use the previous swing low at around 450 as a stop. And if you're looking to short, then your max pain is above this. Your max pain is above this recent high here. It's not rocket science. Now, again, what makes it hard and what makes emotions arise when you're trading intraday is having too much freaking size on the table. When you get into those moves and it pulls back against you 20 points, you can't stomach it. Why are you trying to be something that you're not? Why are you trying to make $1,000, $2,000, $3,000 this week? Or hell, why are you trying to make $1,000 today on this one particular day? What is the rush? This is a long game. You can make money fast each and every single day, but it's a long-term game. Look forward to working with you. Look forward to trading with you guys. Have a fantastic and blessed week. I'll see all of you guys on the next video.